Good morning. This is Lance Kenmore with the Kenmore team, and I'd like to welcome you to this week's edition of the Tri-Cities Real Estate Update. As always, you can contact me, Lance Kenmore, anytime direct on my cell phone at 509-727-8977, or visit us on the web at kenmoreteam.com. Once again, I always like to thank John for hosting and everybody here at the station for working to make this happen. Mr. John McKay, how you doing over there?
How the weather has changed.
Oh man, you are not kidding.
Wow.
We've got the white stuff has been here. We've been flirting with it all week. Now, it looks like it's gonna ease up a little bit on us next week.
We don't have the freezing pipe temperatures.
Yeah, and being in property management, I got to tell you, shout out to our maintenance team over there, John and Julio and Jordan. They have been killing it. It has not been an easy week for them with rentals and pipes on exterior walls, and especially some of those up in the attic spaces. But they were able to help out a lot of our tenants get the water restored. But it was a busy week.
Yes.
And the good news is it might be freezing, but the market is not necessarily. I thought it was super cool last week. We had 2 listings with multiple offers on them.
It hasn't slowed at all.
One had 5 listings. I mean, it was in a really great price range, $300,000 to $400,000. But with rates back down a little bit, those buyers are popping. So it's looking good out there. Well, before we jump into it, we always like to start off with our crazy national celebrity real estate story. So this week, I've got for you an oceanfront mansion in Rhode Island called Spindrift Mansion.
Okay.
This is coming off of Realtor.com. Listing agent Janet Kermes with Mott and Chase Sotheby's. And this is a property that has 500 feet of oceanfront in Rhode Island. It's 7,000 square feet on a 5-acre lot. It was built in 2002, so of the newer era, but it's, only coming in, like I said, McKay, at here you go, salty $10 million. So if you got $10 million lying around out there, that is my Realtor.com national celebrity pick of the week. Well, we are going to jump right in, McKay, to one of my favorite shows, and that is, what predictions did Lance make in 2023, and what did I get right, and what did I get wrong? I love to go back, pull up my January show from last year, and say what was good and which ones did I totally miss. So just starting right into it with the big one, and that is last year in January at this time, I predicted that 2023 price appreciation in the Tri-Cities would fall below 10% for the first time in, 5-6 years. And I was absolutely nailed this one. Now, however, it was lower than I anticipated, and there's been a lot of talk about that in the Tri-Cities market and what that means. But in all actuality, now that the final numbers are in and we've tabulated all the final numbers, if you're just looking at average price point, not only did appreciation rates in Tri-Cities fall below 10%, they actually were negative. It was actually a small amount of depreciation. And a lot of people aren't going to like that. In fact, a lot of agents are going to be mad that I even mentioned that on the radio show. But these stats and these numbers do not lie. So what we're looking at is negative 3.5%. So we had depreciation of 3.5% when we are looking at the average prices. Now, next week, in a couple weeks, I'm going to talk to you about exactly which cities were the winners and losers with that, because I break it down into segments. And there was actually one of the cities actually had appreciation. So we're going to talk about that in a couple weeks. But I absolutely nailed that. Now, a lot of people are going to be like, oh man, Lance, don't scare people, and that freaks people out. But I got to tell you, when you look at, like, say, our 3-year running average, you got to look that the year before we had 14% appreciation, And the year before that in Tri-Cities, we had 17% appreciation. And I was saying all along, these rates are not sustainable.
Yeah.
And so here we are with a little bit of a correction year. It's going to make sense when we talk about prediction number 2 on why that happened and why it was a little more drastic than I thought. But number 1, I'm giving that to myself. Absolutely nailed that one. Mm-hmm. That one for sure. Now, prediction number 2. In my notes and on the show, if you go back and look, January of 2023, I said that I felt like interest rates were going to settle out around 5.5%. Mm-hmm. I was predicting what a lot of people were calling, and that was the soft landing.
Yes.
McKay, when I miss these and screw this up, I'm the first one to say
admit it.
There was not a soft landing with interest rates.
No.
So this one was an absolute miss on my prediction. The only thing I did to make myself feel a little bit better is I went back and looked at all the data that I had researched to help me. Mm-hmm. And pretty much every single expert in the real estate markets back in 2023 missed this prediction. So I didn't feel nearly as bad about myself. Yeah. But I would have liked to have called it a little bit closer than that. So they didn't end up falling around 5.5%. What ended up happening in 2023 is right now, the Freddie Mac has the average at right about 6.8%. Mm-hmm. And for a large part of the year, we were around 6.5%. So I was a full point lower than I thought things were going to be. Also, that really plays into what we just talked about with a little bit of depreciation on the prices, because what's going to happen, rates are going to be so high that we're going to lose a big segment of the buyers. And we did. A lot of first-time home buyers that had qualified in 2022 at those rates, when they went up to 6.8%, and that's the average I'm talking about. There was a couple months in October, November timeframe when we saw some rates as high as 8% for a while. And so that was just completely unexpected, completely unheard of at the time, and something that I did not see coming. So bonuses, now I guess when I'm doing this show, a few years from now, I can say I've seen a lot. Yeah. And I've definitely seen a lot more. So we've been dealing with that and what that looks like. The good news is those rates have gone back. It is looking like a lot of the data is showing, and we're going to do predictions for next year. That's going to be another show. Mm-hmm. But we have good news on the horizon as far as rates are concerned. So right now, settled around 6.5%, and that's really fueling a lot of activity in the market already in January here in the Tri-Cities. All right, prediction number 3.
Okay.
Is now we're coming off a loss. We're coming off one that Lance had gotten wrong. But prediction number 3 is I really felt like new construction home starts would be flat as opposed to 2022. And here's what we had happen. We had lots of builders that switched from a mentality of build as fast as you can, not do any customs, just put up as many specs as you possibly can, so that I don't have to deal with clients, and this is way easier. They moved to a perspective where the banks wouldn't allow them to build that many homes at one time. And that got worse in 2023 because as rates got up, builders are just like a home buyer in that situation. When they're going to the bank and they're talking to them, the bank's like, hey, now with rates here, you can only do so many starts. If you were doing 10 before, we only want to see you do 7 because we don't want to extend that much credit for you in that position. So that's exactly what we saw have happen. This went about exactly as predicted. When you look at new construction sales in the market for 2023 as opposed to 2022, the closings were super close. Like it was 13.6% of the market versus the previous year that was 14%. Now that's coming out of Tri-City MLS data source on that. But when we look at just that, the number of sales were very, very similar. And builders are still playing it safe, right? They don't want to go bankrupt by having, 10 specs ahead of them
Yeah.
that they can't sell. If you're a small builder, that's a lot of homes ahead of you sitting there that you can't sell. I mean, when you look at home prices and you
Yeah.
put 10 in front of you, we're talking millions of dollars of inventory sitting. And so you want to make sure you're turning that inventory. So far, it looks like we're staying in that number, and it was fairly flat. Once again, we're going to break this data down by segments in future shows, but for the most part, we were flat in that situation. So I nailed that one, McKay. So
Yes.
I'm before the break, I'm 2 for 3.
Yes.
Which isn't too bad. I mean,
That's pretty
I
good.
missed some big ones, and I got to tell you, I think I missed a few more. But I also got a few more right. When we come back from the break, we're going to go through Lance's predictions from 2023, what I got right and what I got wrong.
Right here on News Talk 870.
Welcome back to the Tri-Cities Real Estate Update. Today we've been doing our accountability of prediction show, McKay. You and I always talked about it. I never liked how very rarely do you see somebody go back, look at their predictions, and then say, I got that wrong.
Yes.
So every year I said, I like to have a show where I go back, look at the data, look at what I said, and bring that to the forefront of here's what happened that I was expecting or wasn't expecting. Because a lot of times in our job, when people hire us, they want somebody that is paying attention to those type of things.
Yes.
And then can learn from those cycles and what that looks like. So before the break, I went 2 for 3 on that situation. I missed
Which is pretty good.
I missed the interest rate one by quite a bit. So we're going to jump right into what was happening for Lance's 2023 predictions and compare those now that the numbers are in to where were we. So I had written for that show a year ago, I had written that I thought that what you would be hearing about in the news, the declines that you were going to see, if there were declines in depreciation, I said would likely be in boom markets. And I specifically called out Boise and Coeur d'Alene, Phoenix, and Las Vegas. That was my prediction. I said, you're just going to see these markets get killed in the media and actually by actual home prices and depreciation. So I'm going to say, I'm just going to say I was wrong, but I was only partially wrong. Is that okay?
Yeah.
On this one, we'll still put it in the you missed it category, Lance. But if you go and look at Realtor.com data and Yahoo Finance data, the Boise market is down on pricing about 6.8% for the year. But I got to tell you, that market the last 2 to 3 years has been absolutely on fire.
Yes.
Phoenix, the same thing. Phoenix was down about 5% in their price points there. Now, what's interesting is I totally missed it on Las Vegas. Las Vegas actually beat expectations and had a 5.9% increase in 2023, which is really opposite the trends that they've been seeing there. But I think employment stayed very strong there. We saw a return to their travel numbers were back up. So that was one that I totally missed. And when you look at it, overall, the U.S., the amount of appreciation, that rate of change decreased, but overall the U.S. last year still increased. And so the average sales price across all of the U.S. went from $407,000 to $409,000. So it was closer to flat, but still an increase in that situation. And that was just one I didn't see coming. I would have thought 100% we saw those decreases in Las Vegas, but they didn't have the overbuilding that they had before. They had strong employment numbers. And so that was an option. That was one of those where I got a few of them right based upon some of the knowledge and then missed on that one. So congratulations to Las Vegas with your appreciation there. That was a save for that. Everybody still likes to see that. Number 5 on my list here of my prediction scale is I went out there to renters and I said renters really had been getting hammered as prices of homes went up.
So did
rental
the
amounts
rents.
went up as well. And then also in that situation, what I saw happening is I had said in the prediction is I said you will see some rent relief as new projects come online in 2023, especially here in the Columbia Basin and around the Tri-Cities area. And there had been lots of investment in multifamily projects, large apartment complexes, that type of stuff. So I thought that supply would finally catch demand and stabilize rents in 2023. In actuality, that was one that wasn't as big as I saw. We still saw, in most cases, we saw rental increases out there of a lot of renters got notices over the last year. Market rents still went up $50 to $100 per month in a lot of situations across the board with these rental companies. However, I'm doubling down on this one. I know this isn't the prediction show for 2024.
Yeah.
But I'm doubling down on this one again. If you look at Badger South, if you've driven by Road 100, you can see we still have 1,900 to 2,300 new units coming on board in the first half of 2024. That's likely going to make a situation where rents do stabilize in that situation. Now, nationally, I was really close on this. The median rent of $2,050, that's nationwide. So $2,050 is the median rent nationwide. That is very, very similar to what it was in 2022. So on a national scale, it was very stable. Locally, we still saw, and there's a lag sometimes with rent.
Yeah.
We still saw some of those increases coming from the previous year. Now, I'm giving you data that said we had slight depreciation. I'm also giving you data that rates are coming down a little bit, which means some of those renters will be back in the buying market. And when they do, that creates vacancies. And when you create vacancies, along with massive new projects coming online, I think we're going to see more of that stabilization in the next year. So once again, I'm going to say half right on that one, McKay. So I think I've got one loss and one win between the last two. I was really
so
split
you were 2 for
those.
3 and then 2 for 4. So we're going to say you're 4 for 7.
Okay, well, don't worry about that.
Let me get out my batting average calculator.
Okay, don't worry about that because I've got my next one is going to help out a little bit.
Well, if you told our daughter she was going to go 4 for 7 in a tournament or a game, she'd be giddy. Okay,
so I'm going to take our baseball and softball numbers there and say that we're doing okay. So. Now this one was great. Number 6 is I had said my prediction in 2023 was that you are going to see the largest sales number we have ever seen of townhomes and condos in Tri-Cities.
Ooh.
I just said that I saw coming the adjustments to material cost, availability, the big one, affordability. When you can build common walls and have that product, you can get more units on less land available. Because it was so expensive, I had predicted that we would have the largest number. And this one I absolutely nailed. So this one 100% nailed. When you looked back, 2022 data saw 165 sales. Now, the final numbers are in, and when you look at what happened in Tri-Cities, we saw a decrease of almost 20% in the number of units sold in Tri-Cities. In 2022, it was 3,916. This last year, final numbers, it was only 3,171. So, which seems like, okay, 20% sales drop isn't too bad, but we also had 20% drop the year before. I mean, we're talking number of sales units down from 5,000 in Tri-Cities to 3,000. That's a big difference. Now, but when you look at, like I said, 165 townhouse sales in 2022. In 2023, we sold 20% less units in 2023. But we had 178 sales. We increased almost to 6% of the total sales in Tri-Cities were townhouses in condos. And I really think what's going to happen in 2024, this number is going to be even bigger. It doesn't take a genius to drive around Tri-Cities and see the number of these projects that are coming online. So that trend is happening. I thought it had to for affordability and first-time home buyers. If you're not taking a look at townhomes and condos as an opportunity to get into the market, the big term coming up for 2024 is house hacking.
Yeah.
So house hacking, that's a house hack for those starting out in real estate investment. And we'll look at that. That's going to be another show as well. So once again, that one, McKay, I absolutely nailed. That went exactly as I expected. We're going to wrap up, McKay, with the wild card. And I always like to have a wild card out there. And I was wrong on this one. So what I had said as my last prediction last year of 2023 is I said one of the big 6 firms in Tri-Cities. When we look at that, we're talking about your Coldwell Banker, your Redder and Company, your Windermere. I said one of the big 6 firms was going to sell or transfer ownership in 2023. And unless there's some secrets out there that I don't know about, I absolutely messed that up. So it didn't happen. I guess they were all making so much money they didn't need to sell or make a change, and so they held on to it. But I really thought, when there's big industry changes that happen, and we've talked about the agency law changing and real estate being very different today than it was over the last 20 years, sometimes that breeds some sort of change where somebody just says, it's going to be easier for me to hand this off to somebody else. So I really hope somebody calls me after the radio show this week and says, Lance, actually, it's not really public and there was a change, and I might someday come back and tell you I was right and I just didn't know about the sale. But as of now, it looks like everybody's doing the same things they were doing. So that one I totally missed out on. And I was wrong on that one. And so that's where we're at with the predictions. McKay, what did you say my batting average was?
Well, it was going in. It was 4 for 7.
Okay.
Coming out of the break.
Okay, coming out of the break.
Yes.
Okay, gotcha. So I'm going to take it. I'm going to take it as a win. It's hard to tell these things exactly. We have a lot of fun with it, making these predictions, using some of our data, boots on the ground to do that. What I'm really excited about, though, as well, is next week. And next week, we're going to get to my predictions for 2024 and what that market looks like, so we can do the same show again next year.
Yes.
So, McKay, with 2024 predictions, I will be talking to you next week.
Right here on News Talk 870.